So this is how we caught 250 handles on CPI day last month. I just want to run through it with you real quick and give you some insights as to what we were thinking and how we discussed it on our session in order to be able to catch the move. So we come in and we see that CPI candle had a massive push down and it's taken some form of liquidity to the downside. We see that it's set up and it went and ran the high before we started our session. But just coming in and seeing the structure from 6 a.m. until 6:30, I can see that we have something that I call left leg and right leg being higher than the left leg. And then we had a shift in market structure with the 6:30 opening candle. And I see that 1, 2, 3 candles down, it pushed up and swept some type of liquidity off of the 6:30 push. So right after that candle, we have a drop down candle that creates a 1-minute FEG. The 1-minute FEG gets retested, and I know that we're potentially going to be heading down to take out the CPI candle again. And since the Asian session pushed up so heavy, I'm looking to fill up the market opening range, meaning the range that was created from the previous day's close to where the US session started. So with that being said, we try to enter on the 1-minute time frame FEG, and we see that we take this play in a second here.
Let's take a short right here. Throw your stop above the 1-minute FEG.
So as soon as we enter, we see we're in profit. We're running at about 25, 26 handles. It's looking really good. As long as it doesn't pass the 1-minute FEG, we're gonna be good to go. Everything's gonna be fine. I realized that it's looking really good. Opened up the profit area. We see that we have a 124 handle range to take out the CPI low. And if we continue to drop off from there, there is a further 120 handle range that we should fill up, which will bring us to a total of 250 handles. So at this stage, I see that we've made 3 lower lows, and this is something I call triple divergence. So if we push up and we break the structure, then we'll have to reverse to a long. But as long as it holds the 1-minute FEG that we have our stop above, then we know that there is going to be further continuation to the downside. One more drop down at this point and we're locked in. It's going to take profit. So I'm just sitting back, waiting to see how this is going to play out in this area. And if it's going to play out one more leg down, then I know for a fact that we're going to make it to take profit. So I can see at this point that we had to drive up after the triple divergence, and we've hit an area of imbalance, and we've used this area of imbalance as a potential resistance for price. After that, I'm seeing a few candles paint to the downside, which gives us further sell side confirmation. So we've now created a new low. Since we've created a new low, I can anticipate that we will for sure run out the CPI low, judging based off the fact that before we came to session, we ran out the high. So the next level that the stop losses will be at, that orders will be at in the marketplace will be beneath the CPI low. So we've taken out the CPI candle, but not in a normal way. The way that we took out the CPI candle was a hard snap down. This is giving me confirmation that will make it to clear up the opening range that we discussed earlier. So I see at this point that we've established the opening range of the US market open area. So based off of that, what I like to do is I'll take the second standard deviation and I'll map it out. What is a standard deviation? Standard deviation is basically the range that we created in the opening range multiplied by 2. So if you were to put a rectangle in that area and move it down, then that would be the second standard deviation. Another thing that I like to take a look at is the 50% of the second standard deviation range, which in this example, we see that price has procrastinated at the 50% level that I just discussed. Now we could see that we've broken out of the 50% of the second standard deviation area, which means that the next level that we'll have to reach down for is the second standard deviation, which will be our total TP, and we will be done at that point. And that's it. We've hit our take profit. We've locked in over 250 handles. You don't need any more for the rest of the month. You don't need any more for the rest of the day. It's that simple. We came in, we determined the high probability setup based off of different factors that the market was showing us, and we capitalized on the market to the full effect. If you like this video and you want to learn more from us, then please subscribe to our channel, follow us on all the social media pages we have listed, and check us out on our website. We'll catch you guys next time.